Hey everyone, this is the Trader Investor. I want to do a recap of today's action, and by that I mean the SPY, the Qs, the IWM, and the diamonds. And let's start with the spiders. This morning, as we were setting up for the markets, I did mention we were going to gap down, and I wasn't sure where the markets wanted to go. And throughout the day, they gave us indications, and I will show you how I looked at these indications to take advantage of the price action. A couple of things to note though: when price gapped down and started to head up, it had a headwind at the 15-minute range of yesterday, the low of that. And in the Qs, I made a mistake. I made a mistake meaning I broke my own rules. What are my rules? I have two rules when I enter a position. I must see from entry to a potential target, I must see at least $1 move. That's one. The second rule is in the 15-minute range break, I must see the 2-minute close above my entry or below my entry for a put position before I enter. So I broke both of those rules today. Now, because my stop losses are minimal, I'm able to just absorb that loss and end the day on a positive note. And I'll show you how that can happen. So let's start with my mistake. And let's look at the 2-minute chart. So in the 2-minute chart, when the market formed a 15-minute high, it never closed above it. I prematurely entered, thinking that between 322.30 and this gap here at 324.30, I have $2 move. That's okay. That's mistake number one. Mistake number two is the first sign of trouble is the high of yesterday's 15-minute range, and price never closed above it. It actually barely made it above it, which is, for me, it's something that I talk about all the time. Don't be trapped, don't be manipulated, because this is the exact same thing that I say don't do is what I did. Don't be a breakout trader before it gives you a good confirmation. What is a good confirmation of a breakout is once price breaks out of here, it gives you an entry like this. That's a good confirmation. But in a fast moving day that the markets do, is what I want to do is at least on a 2 minutes close above it, and then I can enter for this position. So that's just for me. That's how I get that quick confirmation, because if I'm wrong, here's my stop, and if it immediately reverses, I'm okay because my stop is a small stop, so I'm okay to take that trade. So by breaking both of these rules, I got stopped out right there. So that's okay, because we make mistakes and we learn from those mistakes. And also the other thing is the SPYs never broke the 15-minute range, and I should have paid attention to the SPY before I entered the Qs, because IWM is truly my leading indicator. For me, that's how I look at it. If IWM is not breaking its own 15-minute range, then it's more of a weakness. So I like to combine all of these things, and this is why I'm sharing with you. Don't make those mistakes. I got the little trigger happy. I saw, it's a big opportunity, and I entered it for a small loss, but we captured it. I'll show you how we captured it. So let's go back to our regular 15 minutes, because that's what I like to trade on, is the 15 minutes. In the SPY yesterday, we came down to an area of liquidity that was marked, and it got manipulated. And then today, when we closed below it, I was still waiting, because the low of yesterday could act as an area of manipulation. So it did kind of act like that, because there was a long position that maybe people took would get manipulated. But even if that doesn't happen, this short position, I'm not in a hurry to enter it, because in this kind of case where it's an area of manipulation, I want to see price break out of that, test it, and continue its way down. This is what I want to see for a solid entry, and that's what the market gave us today. They gave it to us very beautifully, because price went down here, it reversed up here kissed yesterday's low, never closed above it, and this is almost like railroad tracks. So this was a good entry for us. Now that entry is significant because today this entry here had a move of $5, right? Close to $5. So that's why those moves are beautiful for us. Even though I made a mistake, that's okay because I'm able to capture in this move. So if you had missed this opportunity, you had gotten a second opportunity, but for me the second one was not a clean one. Because what do I mean by not a clean one? Price makes a low, it makes a lower high, but I would like this lower high to push a little bit closer to VWAP. This is what my preference. And then when I see railroad tracks like this, I'm able to enter to this downside. Now if you said, no, I don't need it to be up here, I got the railroad tracks, I'm going to enter, that's okay, because what the markets gave you was this distance here of $3. So that's also okay. Now the other thing that I mentioned is order blocks are important, area of manipulations are important. So once we got out of this, I knew we had to take care of this order block. This order block had to be mitigated, and it got beautifully mitigated. So if you did not take this position, then reassess for the future, not for today's action, but reassess and look at why didn't I take this position. Was it fear? Was it greed? Did something happen that blocked me from this beautiful setup? We broke the low of yesterday, we retested it, we never closed above it, and price kept going down. Why didn't you take this position? I think this is quite important to know this. And what this gave you was an opportunity for me, because of how I was monitoring the trade, that what this gave me was an opportunity of about $100 per contract, because I got in at the touch and I left the position and I got onto my business, and I didn't wait to go all the way down. But that's all right, because my $25 loss is more than covered by my $100 win per contract. This is how we have to look at every trading. This is how we have to manage it. We get a signal, we take it. There's no reason not to take every signal. You have to take every signal, especially when your distance to a potential area of reversal from here to here is more than $1. Even if we say the order block will get mitigated right at the touch, that's enough, then that's more than $1. You should be able to take this kind of trade. This is why I want to encourage you to look at area of manipulation, strong area of value, an order block, support resistance. Support or resistance will be manipulated. That's your liquidity. Wait for that manipulation to be over. Over meaning it will take one direction and it will reverse back to that area and never close above it and continue down. And if you're wrong, that's okay too, because that's what trading is about. Is that sometimes we make a decision and the market decides to give us something else. So when this happened, and you enter right there, and if the market maker decides they want to take the price back up, that's fine, because your stop is right up here. And for me, when I enter a trade for a same day exit, I want to see price push down immediately. I want to see that dollar move immediately. If it's not happening immediately, if price is consolidating like this for 2-3 hours, then I'm most likely tightening my stop or even just exiting that position. But in this instance, that's not what happened, right? Immediately upon entry, so here's this bar here is our entry bar when we got here. Upon entry, you got, of course, it reversed a little bit on you. That's okay. You have your stop loss up here, and price gave you that distance here from entry to here. This is what we look at. This is why I want to keep doing this reviews, this analysis with you, so that you can better assess why you did not take a trade, why you took a trade in the wrong direction, or why you got stopped out. were you stopped out because you entered here at the right place, but was your stop here, or was your stop at the open here, so your stop was too tight? Was that the reason you got stopped out? Things like that could happen. Or did you not calculate enough distance in your options, and you said 20 cents is enough, but maybe it needed 25 cents to give you that breathing room? You have to look at all of that based on the expiration date and the strike price. All of that have to be in play. And so today, another beautiful day in the SPYs. Beautiful for day trading, not beautiful for buy and hold positions, but for day trading is good. So my mistake in the Qs were more than covered in the SPYs, but in the Qs I would not have entered a short position because I have this order block here that's coming from a long time ago. That's a daily order block, and so in my mind, when I hit the order block, price reverses, and so that was not enough distance for me to entertain the Qs. IWM, there was a monthly order block that got taken care of, but I left it here because I had a feeling we were going to completely close it. But no entry for me because I did not know if that will hold completely or not. I just knew that IWM was weak. There was no reason for me to rush any entry to the downside, but the SPYs, based on IWM weakness and being how far away we are from an area of value, once we negotiate the yesterday's low, that was a good signal in the SPYs, but not in the IWM. As I say all this, you can say, well, but look, price gave you the solid move from the break of that to the lows of $4.64. Yes, it did. But if price wanted to just do this and then reverse, I would be stopped out, and that's not my comfort level. I want to be stopped out when this happens. I want to be stopped out when the market says, I gave you this, but I'm going to reverse because my distance is here. That I'm okay if I get stopped out in that. But for the markets to say, I could be soon reversing, when I see my signal saying I could soon be reversing and entering, for me that's kind of foolish. That's the foolishness that I did with the Qs, because I knew headwind yesterday's 15-minute range, headwind yesterday's close, of course, between the yesterday's 15-minute range 322.50 and the close 325.27. there's a lot of distance. This is where I got greedy and I took this position before my signals truly gave me the entry. So I just jumped the gun. Sometimes you'll do that, sometimes you'll make those mistakes. So that's why I did not take the IWM position. Diamonds, there was an imbalance left, so not far enough for me to enter a position. So once this imbalance got taken care of, then there's an area of potential manipulation, and price did continue to go down and retest VWAP. And so here I'll show you why I skipped this trade even though I saw it. Price came down, reversed to VWAP, but it reversed in a sideways action, in a consolidation. It reversed for me in a consolidation. So what that means is I must have a solid move down with volume, and then I will enter at the low of that move down. This is my entry. So what happened? Two things. There was that solid move down, but the volume was not unusual. It was not greater than the others. That's one problem. The second problem is the distance from my entry to the area of manipulation between this low and this entry was $1.40. So I did not feel very comfortable with it. I know I always say I want $1, but with the low of the previous week hanging around here, where I don't know if price would get manipulated, I just didn't feel comfortable entering that position. And so, but the SPYs gave us what we need anyway. So, and not only that, this order block got mitigated, and so it doesn't owe us anything anymore, and we have yet to see what the markets will do. In the morning, it looks like from the futures, pretty flat, right? Very small recovery from the futures. But in the morning, when I do my analysis, we will take a look of where the markets will open and where they will head to. So with that, I wish you continued success. Don't forget to like this video. My food, my encouragement to let me know that you're following and you're having some success. If you're not having success, let's have a conversation. Why not? Let me help you figure out where we can make some adjustments in how you're analyzing the charts. Not about your entry, not about making a recommendation, but how are you analyzing the charts? Can I help you make a better decision and smarter decision on those charts? All right, everyone, take care, and I'll see you in the next one.